Welcome back, everyone. Today is Monday, January 10, 2022. Looking at the daily chart of the S&P 500. And today we had a very volatile day. Big sell-off followed by a big bounce. Didn't quite make it to the 100-day moving average, but the 4,600 level proved to be heavy support. And you'll see in a minute once we take a look at the intraday charts. Today was a big reversal day, closing near the highs of the day. Is trading right underneath the 100, the 50-day moving average. So I would expect lots of resistance around that area, especially if we approach from underneath. If we gap above that, then I would expect that to act as support. Gotta be transparent. So today I decided to go long the S&P 500 via the ETF UPRO. I bought right around that area, right above 4,600. I'll show you on the 5-minute chart. Big gap down in the morning, big sell off, bounced, couldn't quite stay above that 4,600 level, pushed lower, pushed back above it. That's when I decided to look for an entry point. Ended up buying above these moving averages around 46. I think it was around 46.10. Pull back, support, coil around that 4,600 level, and then push higher aggressively. Since then, it just kept going up. Minor pullback and finish near the highs of the day. So I would expect this to be a short-term bottom. My stop is below today's low. Let's now take a look at the hourly chart for tomorrow. Like I said, the 50-day moving average should act as heavy resistance if approaching from underneath. If we gap higher and push below it, that should act as heavy support. If not, I will consider taking some profits. Other levels that I'll be watching closely tomorrow will be 46, around 46.50 and 46.20. Next is the Nasdaq 100. Very similar price action to the S&P 500. Gap down, push lower, reverse higher, and close near the highs of the day. If you remember, this was a very heavy support here also. Today dipped below it and finished above that level. Going forward, the 100-day moving average should be act as heavy resistance. For support, there'll be this level around 15,520. Oh, by the way, I am long the Nasdaq 100 via the TQQQ ETF. I believe this is a short-term bottom, very oversold, and I'm just playing the oversold bounce. Why? I think it's just an oversold bounce. We're very far away. We sold off too much, too fast. And up ahead is going to be lots of overhead resistance, including all these declining moving averages. I'll take a look at the 5-minute chart. Price action for today, gap down, sold off, try to push higher, slight pullback, and then it pushed higher. I bought when it was breaking, pushing above this level right here. My stop will be placed below today's low. Kept pushing higher all day, minor pullback, and finished near the highs of the day. For tomorrow, levels that I'll be watching, going back to the hourly chart, will be this big support or big pivot point. I would expect that if we open higher to act as support. This will be acting as resistance of 15,700. Below 15,450. These are the levels I'll be watching tomorrow very closely. If we gap higher and sell off, I will be looking to book some profits. But today was a very impressive bounce. Going back to the daily, I mean, it's still, is it an uptrend? I don't know. Here, I think there's a fake breakdown. So it still looks bullish, but lots of heavy overhead resistance. So we'll see. We'll take it session by session. I'll take a look at the Dow Jones. Gapped lower, dipped below the 20 and the 50-day moving average. This should have acted as very heavy, strong support. On the way up, push higher and finished above the 20-day moving average, but it's still underneath this heavy resistance of 36,200. So for tomorrow, I would expect that to act as heavy resistance, including this area here. These declining short-term moving averages. But this chart is still looks good. I mean, still in a big uptrend, very strong uptrend. Let's now take a look at the Semiconductor Index. Similar price action, gap lower, push down, found support around this area of 3690, which has been heavy support before multiple times over the last few weeks, and today was no exception. Reversed higher, but still close below the 50-day moving average. So for tomorrow, I would expect that level to act as heavy resistance. If we push above that, I would expect lots of resistance as these declining moving averages are declining very quickly. Today was a very impressive bounce. We'll see if it can push above that 50-day moving average, which I think would be very important to get above that. Finds resistance around that area, then we'll probably test this level again, but we'll see. I'll take a look at the IWM small caps ETF for the Russell 2000. Looking at the daily chart, as mentioned in the previous video, expected 212 to 210 to act as strong support. It actually found support inside that zone, pushed higher, and still under all these moving averages. I would expect lots of resistance up here. Out of all the indices, I think this is like the weakest still, has been for the last couple of months. We're still in this trading range, so I think anything in between is very difficult to predict the outcome. Pushes above 226 to 28, like we mentioned before, it will be a different story. If it breaks down below 210, 209, and it can get really ugly very quickly. Let's take a look at the hourly chart. Remember that pattern we had been watching for the last couple of months, and initially last week we thought it could form a cup and handle. This cup and handle that didn't materialize. Instead, it sold off. But now we have another pattern. Looks like a true, very symmetrical inverse head and shoulders. We'll see if it develops. If it does, it could be a very powerful breakout once we push about that level of 226 to 28. And this concludes my review for today. Thank you guys for watching, and good luck trading tomorrow.